Vetri, as we approach the end of this calendar year, what would be your key advice for our viewers as they look ahead for 2026?
Sure, Sonal. As I've always said, the market doesn't care whether it is the beginning of a new year, a quarter, or your birthday. In the markets, none of this really matters. So the advice has to be, sort of applicable every day. It cannot be advice only for what should I do because the calendar is, about to change to 2026. The markets don't really care whether the calendar is changing or not. So I would say, the good thing that we are seeing this time, Sonal, is that investors are investing in a very disciplined fashion through the SIP route. Now, if you look at somebody doing an SIP over the last 1, 2 years, yeah, the returns may not look as great as when they see the investments in the fact sheet, showing a 5-year return of the investment. But that's okay because, if the markets are doing nothing and you're investing, that's part of the design of the SIP, which is to say that you invest through the cycle. You will invest in good times, you will invest in average times, you will invest in bad times. All of that put together gives you a cost of investment in terms of valuation, which is somewhere closer to the averages, and that reduces your valuation risk in the marketplace. So really my first sort of advice to investors, which is valid today or any day of the year, would be that the SIP is a good way to invest. Don't look just at what you've earned in the last 1, 2 years. If you keep going, it has got the great potential of helping you achieve your financial goals. Second thing is asset allocation. Asset allocation is important. You do need to have the discipline of reviewing your asset allocation to make sure that is aligned with the financial goals that you have. You could do this realignment of the portfolio either when it hits certain triggers in terms of allocation, or it could be a time-based, rebalancing of your portfolios. But if you combine systematic investing with, a disciplined form of asset allocation, it will help you navigate the risks in investing quite significantly. Now, somebody may ask, how do I take care of the risk of, how do I receive or how do I withdraw some of my gains and capital from the market at a point in time where I don't have income and may not be investing systematically? There is a simple solution to that. You can withdraw systematically from the capital that you have accumulated over a career of earning and investing through systematic withdrawal plans. So, I think all of this can be done. This is eternal advice. It has nothing to do with the change of the year, but that shouldn't halt me from saying that there is certainly something I can say when the calendar is about to change, which is I wish all of you, who are on this webinar with us today, and those of you who've, been with us over the past year, very happy new year. Best wishes to you and your family, your loved ones and your dear ones. And may 2026 be a fantastic year for you. Wishing you health, happiness and good health all in equal measure.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.